Hey everyone, welcome back to another episode of The O Show. But on today's show, we're going to talk about your guys' favorite topic, crypto taxes. Just kidding. Most of you guys know who Joseph is. He is over at Mandala Exchange. We interviewed him on the show last week, and I found out that he was a crypto tax professional as well. So I went ahead, I reached out to him. I asked him if he would be so kind to come on and answer some of our questions because tax season is amongst us. I know it is a very, very stressful time. And Joseph has been so kind to give us his time. How are you doing today, Joseph?
I'm doing well. Thanks so much for having me on again.
Awesome. And also too, you guys, generally when you get tax consulting, it costs anywhere between $1,000 to $2,000 per hour for questions. At least that's what I've been told some people pay. So again, Joseph, thank you so much.
It's my pleasure.
Are you still doing crypto taxes for people, even though you're over with Mandala now?
Yes. So I have a law firm that runs pretty much autonomously at this point, with myself being the CEO of Mandala. But we do tax consulting, tax preparation, and tax filing for crypto users that are individuals, as well as LLCs and corporations that hold crypto as well. And our rates are not quite $1,000 to $2,000 an hour, so we do keep it down and more affordable for all U.S. Crypto traders and users.
Awesome. Perfect. Well, you guys, we will have all that information down below. So if you're interested in hiring Joseph or anyone over at his firm to help you with your taxes, you can go ahead and do so. I also highly recommend if you're in crypto today, you should probably have some sort of CPA that specializes in crypto taxes because you do not want to get caught without paying your taxes. So I guess my first question to you is, what are some of the penalties for people that decide they do not want to pay their crypto taxes if in fact they are caught?
Sure. So, there's no debtor's prison in the US, right? There's nothing that's going to send you to jail for failing to pay your taxes unless you evade taxes. So basically the way this works is that the federal government will tack on charges that are white collar charges such as mail fraud, bank fraud, evasion, things like that to your tax liability typically, and will charge the user really high interest fees and penalties if you do fail to pay or fail to report your taxes correctly. Now, if you are found to intentionally avoid, like I said, these fraud charges will be tacked on, and those can incur jail time depending on how much taxes you accrue. So it's one of those things where you have to be very careful to at least file to the best of your ability every year what you're earning in crypto. Now, if you have a year in crypto where there are some losses as well, it can be a benefit to you if you do file and you have losses that year and you take those losses because you are allowed to claim those against your income, your regular W-2 or 1099 independent contractor income. So there are a few ways to go about it that we'll get into. But yes, there are some penalties that can really hurt you financially, as well as if you avoid fraud can be tacked on.
So if somebody files their crypto taxes to the best of their ability, they get audited, IRS says, these weren't done correctly. Is the IRS more likely to kind of work with you on things if you actually do attempt to pay your taxes and you happen to make a mistake?
Yes, absolutely. And that's the beauty of it. The IRS is learning along with the general populace, right? The IRS literally just changed their handbook to include crypto in 2019. So it's really only their second tax year that they've been evaluating crypto and settled on a definition for it. Now, like we talked about in our last show, the federal government, not so much, has not settled on a definition for crypto yet. However, the IRS has settled on it as a currency or currency-like product for, for Bitcoin transactions and things like that, or has equated it to a stock, kind of holding a stock and selling a stock for capital gains and capital losses. So when you file your taxes and you are, you're filing and you're saying, yes, I have cryptocurrency. Yes, I've sold it this year. Remember that each transaction, is a capital gain or capital loss event, short-term or long-term. And the IRS is willing to work with you if you mess those, those calculations up, because you have attempted to let them know that you are invested in this asset class.
Awesome. So as far as capital gains, is there like a flat rate of capital gains that people in the United States have to pay, or does it vary by state?
So that's a great question. Federally, there are capital gains tiers that you do pay for short-term and long-term capital gains. that is set each year and reevaluated each year. And there are different thresholds that you hit. So let's say the lowest threshold for long-term capital gains, I think it's up to $40,000 is a 0% capital gains. What that means is that if your income, including the trading, not separate from, so you have to do your total income that you make on W-2 or contractor jobs plus your trading for the year, doesn't reach that threshold, you pay a 0% capital gains tax on that amount of money that you've, that amount of crypto that you've traded and sold for profit. However, one must remember that you do tack that on to your other income. Some people make the mistake of saying, oh, this is just my capital gains. This is all that I've made this year, when they forget to include their actual job. And that's where mistakes are made in calculating that capital gains rate.
So you have to kind of pay two separate taxes. Is that correct?
Well, yes, because you're going to pay taxes on your regular job, your regular income, whether it's independent contracting, where there's a set rate, whether it's through a corporation or LLC that you own, which is more of a business rate that is maxed by the U.S. government, and the standards are set for that as by the U.S. government. An LLC also being a self-employment tax as a pass-through entity, or your W-2 job, where it's automatically calculated based on your deductions and your exemptions by the U.S. government. So that is already calculated, but your trading is calculated separately, whether it's gain or a loss. That's correct. And also, to go back to that, those capital gains rates, it does vary by state. When you do file your state taxes, as everybody knows, you file a federal tax return and a state tax return. There are states that are more crypto friendly or that have zero capital gains tax. I mean, Florida comes to mind, Texas comes to mind, Wyoming, of course, very crypto friendly. We wrote a very friendly crypto bill in Colorado as well in 2018. But there are jurisdictions that that are very friendly for crypto taxes and capital gains tax filing.
Question for you. If somebody opens an S Corp or an LLC out of Wyoming, but let's say they live in a different state, what are the tax implications when it comes to that?
That's a great question. Now, usually most entities are single member LLCs, right, or very small member owned LLCs. Those tax rates are still going to apply from the state that you are domiciled in. So unless there's somebody living in Wyoming or living in, Texas or Florida that is a member of your LLC, you are still going to be beholden to the tax rate where you live. So I always have a funny, initial conversation with tax clients of mine in California or New York. They ask me what they can do to lower their taxes. I say, move. Mm-hmm. Right. It's kind of what it is, unfortunately, because some of these states are going to get you. Yeah.
Question: what happens if you have a registered agent in Wyoming?
Sure. Well, you can have a registered agent in Wyoming, but that's still not going to avail you of the tax benefits for that state. What that is going to do is protect the identity, which is very important to some people, of who owns the LLC, right? Because that registered agent masks it to the public. So let's say you have a big trading LLC and you have 7 figures, 8 figures in that trading LLC, and it's a legitimate trading LLC with a partner or two, or even by yourself. You might not want people to understand, or to know rather, who owns that LLC, right? So you go through a registered agent. It's good to file in some of these domiciles where you can kind of mask that a little bit and kind of, basically keep your privacy, but it still does go back to the registered address of the office or of the people that own it.
So it doesn't matter if you open an LLC or S Corp in Wyoming, you're still, if you live in California, New York, or some of these higher tax places, you're still going to have to pay whatever that is in that particular state. Okay. Right.
Yeah. So unless you change your domicile and you live there for half the year, it's kind of like the Puerto Rico taxes. You can move to Puerto Rico and take advantage of Tax Act 20 and 22, which is for individuals and businesses, which is a very low tax. It's basically a tax haven for the U.S., but you must live there half the year. So that's what the I guess the requirements are for that.
Fair enough. Okay. So what is tax software that you recommend, or if you can give us a couple or one, et cetera, what makes your job easier?
Sure. And that's a really great question. Our exchange is actually going to be partnering with Accointing, ACCOINTING, and we're going to be delivering that tax software to our users that live in multiple jurisdictions. They're building out their jurisdictional reach right now, and we're going to build with them. But that's a wonderful tax software that is really all encompassing. You can calculate your taxes, you can calculate your cap gains. They even have slider features that allow you to easily kind of see visually what you can save in taxes in terms of how you cash out, how you trade, which is really cool. I've also previously used Bitcoin.tax for my firm, which is a really good way to keep track of all your trades, all your airdrops, which count as different types of income or different types of, different types of income rather in different domiciles, as well as staking, which also counts as different type of income in the, let's say the US and the EU. And it just allows you to easily keep track of where you are tax-wise for the year. So
what about MetaMask or like Phantom Wallet? Because on MetaMask, I literally have probably 30 to 50 different addresses. And that was one of the questions that somebody asked. They said, what is the best way to get tax info from all exchanges, including a MetaMask? Because a lot of us are utilizing decentralized options now.
Sure. So decentralized options are pretty tough. I will say that right up front. If you don't keep good track of your trades and really, watch every single trade you do from crypto to crypto or crypto to stablecoin, obviously, or even a cash out to fee, to another wallet, it's hard to track. And that's a downside of decentralized finance right now. It's not easy like the centralized exchanges that provide CSVs and provide, trade just deposits, withdrawals, so you can kind of have your cost basis for things as well as every trade that you've made. So that's a downside to decentralized finance right now. And I know that's something in the future that as it does get more regulated, that's going to have to be provided for the user base, because as you know, the SEC's mission and other regulatory bodies is to protect the investor and is to make sure that the investor is well informed. And these, while they do overreach, like we talked about in our last interview, well, I do think that this is one of the things that they could provide that will help the average trader or the retail investor, really keep track of what they're doing better. So that's something I do look for. However, so when you have 30 to 50 different exchanges, I mean, a lot of people trade on them. I trade on like 8 to 10 different ones myself. You just try to pull the CSVs and the APIs from all those exchanges, right? CSVs preferably, because you want that in that Excel-like format, so you can upload it to your software. And it will just auto-populate and it will calculate for you based on a variety of different settings that you have, either first in, first out trades, last in, first out trades. I mean, you can kind of play around with that just to set it and do your taxes that way.
Yeah, I cry every year and I'm going to be crying again soon. All right.
So do I, and I have to do them.
I know. I feel so bad for you. Okay. I have a very long question. It's got a lot of questions in them, and this will be the last one. But I have one question prior to that. When are taxes due for 2021?
So they should be back down to the regular time frame. I'm not sure if the COVID rules are going to apply in the US, at least, where we extended everything by a month. Typically, it's April 15th for individuals, March 15th for businesses. They extended that out last year because of COVID, because COVID really had a negative impact on our whole economy, as we know. And it really sent people scrambling. Unemployment benefits went out at different times to millions of people that needed them, that were laid off. So there was a little bit of leniency, but the way I always look at it is when January rolls around, or even before, start planning for your taxes for the next year, right? Get all your CSVs together. If you're not going to trade at the end of December and you're really just holding your positions, make sure you have everything ready for January, because it makes it easier on firms like mine. It is a very tedious process to work through, every trade and calculate the best, best tax strategy for each client. And for a firm like mine that usually has about 50 to 60, maybe more tax clients every year, it does get tedious and you do get put in the back of the line if you come late. So it's one of those things you want to be ready. You want to be going and be proactive about calculating that out. So I wouldn't wait till the last minute. I wouldn't wait till even a few weeks before. Get it ready a few months before and send it into your tax professional so they can work with you through it.
Thank you. All right. I'm going to go ahead. We're going to tackle this question. There's a couple parts here.
Sure.
I think you answered some of these already, but let's go and get this answered. Okay. Part one, if you have some crypto coins in your personal wallet, and let's say you withdraw $50,000 worth of ETH to Coinbase and convert it to fiat, how is the tax, or how will the tax be calculated in this case? Is it going to be considered a short-term gain or a long-term gain, something different? Sorry.
No, I'm sorry, Wendy. Sorry to cut you off. That is a great question. So there's a few parts to that. You're right. So the first part is, when did you buy that Ethereum, right? If you bought it less than a year ago or more than a year ago, it depends, because less than a year ago will calculate to short-term capital gains. More than a year, it will calculate to long-term capital gains. Now, the event that triggers the So there's two events that trigger, actually. Let's start with the first one. When you purchase that Ethereum is going to be what's called your cost basis, or the amount that you bought it for, right? Let's say, just for sake of argument, you bought 50 Ethereum at $1,000 a piece. Let's keep it easy. So that is your cost basis, that's $1,000, right? Then you want to cash out 50,000 worth of it, but now it's $2,000 a piece. So you move 25 over to Coinbase and you cash it out to fiat or a fiat equivalent. It doesn't matter for the sake of argument, because you are making a transaction where you are, making money on it. So that is going to be your, that's going to be your sale price, right? So when you sell, and I'm sorry, I said 25, I meant still bring the 50 over, because you're still cashing out the 50 Ethereum, and you've made $1,000 on each one. That $50,000 that you've made is your capital gains, whether that's short or long term, because you've set that new cost basis for the sale at $2,000 from where you bought it at $1,000. So the difference is your capital gains. Hopefully that makes sense for everybody. So you have a cost basis where you buy, capital gains or capital loss where you sell. So there's two events there. And when you do sell, that is the amount, the difference is the amount where you calculate your cap gains. Does that make sense?
Got it. Thank you. Yeah, I had to turn my mic off for a second. Okay. Next question is, they said they wanted to know, do you have to show your personal wallet on your taxes? And I feel like I can answer this. Kind of, yeah. If you're cashing out, you do have to. Is that correct?
That's correct. That's correct. So let's say you have your ledger or your Trezor, whatever it is that you're storing it on, right, in cold storage. You've purchased that crypto before and you've set your cost basis somewhere, whether you bought it on an exchange, whether you bought it at like local Bitcoins, doesn't matter where you bought it. It was already purchased with money that ostensibly was taxed at some point, right? Because you're buying it with cash from somewhere. That money has already been taxed once. So you do not have to double report when you store it on a cold wallet, or you store it even on a hot wallet somewhere. However, when you sell and you move that crypto to sell, that is when it's a reportable transaction. So the IRS in 2020 clarified that and said, you do not have to report crypto if you hold it. You have to report if you transact with it. And that's an important distinction that all individuals and businesses should understand, because it does affect, whether you report crypto for that year or not. If you're just holding it, no. If you transact, yes. So remember that as a basis for your reporting.
One thing I do want to say and remind everybody that it is okay to pay taxes and it is okay to take profit, because if you are if you do have to pay taxes, that means that you have made money. So I want to kind of just throw that out there and let people know that it's okay to pay yourself. It's okay to take profit. The softwares that you mentioned prior do kind of help you calculate, like, hey, if I sell this $50,000 worth of ETH, how much am I going to pay? But at the end of the day, if you need to buy something with your crypto profits, utilize a software that's going to help you determine that decision, if it's a good idea to sell or how much to sell, and then always consult with your CPA. So just want to throw that out there. And then last question, they said, how will stable coins be treated when it comes to taxes?
Sure. And that's a great question. A stable coin is going to be an equivalent of $1 or a euro or a pound or whatever that coin is pegged to, basically. So if you trade if you trade a stable coin to a stable coin, let's say you sell USDT for USDC or something like that, there's no tax implication, right? Because the cost basis is $1 for each one. So you're trading $1 for $1. There's no capital gains there. I mean, it's negligible. So there's not really any value in calculating that out. However, if you are trading from crypto into a stable coin, it is the same as cashing out from a crypto to fiat. So because it is an event that is triggering a new cost basis for whatever token you're holding, whether it's Tether or USDC or GUSD or whatever it is. So that's how that is treated. Now, when you cash stablecoin to $1 or to pounds, there's, like I said, it's negligible because it's a one-to-one cash out. So there's not really a double taxation event. There's just the one taxation when you cash to that stablecoin.
Awesome. Joseph, thank you again so much for your time. I know I took a little bit longer than 10 minutes, but again, you guys, I'm going to have Joseph's links to his firm if you guys are interested. I do highly recommend, if you are in crypto, you find somebody that you resonate with to kind of help guide you with this. It's okay to hire people. It's okay to pay them. And I highly recommend that you do pay your crypto taxes because we are seeing a lot of government agencies kind of crack down on different things regarding crypto and blockchain. So it's probably better that you do pay them. Again, I hate paying taxes. I think taxes are scams. And the Fed, I'm so sorry, Joseph, this is so inappropriate. But at the same time too, you guys, I do recommend that you pay your taxes. Joseph, thank you so much and have a great rest of your day.